Okay, hi everybody. So thank you for joining us for our third session of the CCE Farmer Tax School. We appreciate you guys sharing your time here with us tonight. Apologies, there's a couple of folks that are having some tech issues logging on, so we're just trying to get them situated here. I am going to have everybody turn off your video and your microphone just to help with bandwidth. We do have quite a few folks joining us tonight. But please feel free, once we get to the question and answer session, or if you have a question throughout, to unmute or drop any questions that you might have in the chat box. Okay, so let's go ahead. I'm going to get everybody started and then we'll switch it over to our amazing presenters that we have tonight. So for those of you who have already been in one of our tax school meetings, I apologize because this is going to seem like the exact same thing, and that's because it is. So tonight's course is on farm financial. It is not. That was last time's course. So tonight's course is on taxes for small and part-time farms. We will wrap up around 9 p.m. We'll have some time for Q&A at the end. So if you have questions, we really want you to make sure you're leaving with those answered. Just a couple of housekeeping things. Again, if you have questions, you can use the chat to type those in. You can send questions directly to me and I can help get those to the presenters if it's something you want to stay anonymous, or if you want to send it out to everybody, you can do that as well. We are going to keep everybody muted and without video just for bandwidth sake. And everybody should have received an email with tonight's materials. Following this workshop, we'll resend all of those resources as well. And we're going to have a post-course survey that I'll drop in the chat later on. If you have the time to fill that out, we really would appreciate it. We definitely take everything into consideration and are looking for ideas for future workshops as folks, if there's something that piqued your interest. And you all should be receiving the email or receiving an email with the recording of tonight's workshop and all of the links to the resources. And then finally, we have one workshop left. Next week, we're going to be hosting tax code benefits for farmers. This will be for farms that are filing a Schedule F or operating as a business, and will include some of the perks that come along with filing as a farm business. And then if you missed our last two sessions and you would like the recordings or the materials for that, we can do that. We're going to leave those open until the end of this month. So just send me an email and I can help coordinate that for you. Our first course was income tax planning for farms that file a Schedule F. And then last month we held farm financial records for decision-making and tax management. And then I do have one shameless plug that we want to talk about quickly. We have an upcoming project that we thought would be really useful for some of you guys. We just wanted to share this. We're going to be hosting a Know Your Numbers, Know Your Options workshop series. If you want more information or want to register, you can visit tinyurl.com/CCEannies or let me know and I can send you the information. It's a series of 5 sessions, $100 to participate per farm. We do have scholarships available if you need them, and if you are a veteran, you can attend for free. They're going to be held 12:30 to 2:30 on Tuesdays starting next week. So 5 weeks in a row around lunchtime. These sessions are for farm women, particularly of any type of production area, farming type, who are interested in learning more about financial statements, using their financial information to make better decisions, learn about key decision-making tools and resources and how to use them. And we actually have some homework built into the series, so you can use these tools right away and apply them to your farm. And then also we'll talk about improving communication with your family, your business partners, your lenders. So it's it's an intense series, but a really helpful series. It's discussion based. If any of you guys have participated in Annie's project before, you know that, we've got content, we have speakers, but a lot of it really comes down to discussion amongst all of the participants too. And then just a general disclaimer, none of us are licensed tax preparers. This is for educational purposes only. We try to, stay up to date and provide correct research-based information, but errors are possible. So we encourage everybody to work with a accountant, tax preparer, legal counsel who have experience working with farm businesses in particular. And very quickly, we do want to thank our sponsors. They were really influential in letting us offer this program at a discounted rate and have scholarships available for folks. So our sponsors include 2020 Consulting, MBT Bank, Farm Credit East, New York FarmNet, and we're very grateful for all of their help. And then finally, just kind of a closing thought. As you are going through this presentation, we're going to give you a lot of information, and I would just encourage everybody to think about how you can utilize this information for your farm in particular. So we're not expecting you to leave here experts. We're not expecting you to keep all of this information in your head. Just pick out 2 or 3 key things that are really going to help you right away and leave with those. So with that, I am going to turn this over to our speakers. Okay, all right. I think Steve, you're up first, or Dan. I'll let you guys figure it out. Thank you.
Yeah, I'm up first, Caitlin. So welcome, good evening, everyone. Just a little plug there. Once again, a reminder that this is for informational purposes. We are not tax practitioners or attorneys. We view, as extension educators, we view this issue of taxes is more from a management perspective, that business owners should know something about taxes. We feel that people do not necessarily, may not be in your best interest to prepare your own taxes, but still information about taxes is important so that you can use it for management purposes. So question
Sorry, I forgot the poll, if you want me to throw that.
Oh, I can do that.
Thanks.
And I didn't even have to pause. Okay. Yeah, so we kind of want to know who's here tonight if using this poll, and it is kind of a long list, laundry list. So if you don't see your enterprise listed there, or see all the questions, please feel free to make sure you scroll down. So we'll give you a minute or 2 here to work on that.
I would just add, if you are doing something that isn't on this list, we're only allowed to put 10 things in. So feel free to type it in the chat too. And Teresa, I'm not sure why it's not showing up. We've had a couple of tech things happen already. So
All right, for the sake of time, I'm going to end the poll here and share the results. So as far as the types of enterprises, fairly well. We've got some good distributions here. Vegetables, fresh fruits, hay and other diversified crops seem to be the ones popping up here, and beef as well. So we've got quite a few people that I would consider beginning farmers, less than 2 years. And then we've at the other end of the spectrum, some that have been farming for greater than 10 years. So that's great. And then filing Schedule F, we have about half of you that responded saying, yes, you are filing, and then some others are not sure and no. So hopefully for the no and not sure, if you at the end of today feel a little bit more comfortable working with a tax practitioner to have your taxes prepared. So back to sharing the screen. So question I oftentimes get is actually a couple of questions. One is what's authority number, or what thing do I have to do to be considered a farm so that I can file income taxes? And then what do I, or a more generic question, what do I need to do to prove that I'm a farm in order to be able to claim myself as a farm and be able to file taxes in part as a farmer? And so the questions really does depend on who you ask. And tonight, I'm kind of starting things off, and then Dayton and Joan are going to elaborate even more on, depending on who you're asking. And when I say who, I'm talking more about either a state or federal, the state or federal government, will determine whether or not you'll be considered a farmer or not. So as far as the federal government is concerned, particularly when it comes to income taxes, you're considered a farm if you generate greater than $1,000 worth of farm income. If you have greater than $1,000 worth of farm income, then you're able to file Schedule F of Form 1040. And do I need to make a profit? No, you do not need to make a profit. And Dayton's going to go into more detail about that shortly, about a hobby loss rules, or a hobby versus a farm business. And so there is no certification number or ID number that you need separately from when you're filing your Schedule F. It is a schedule of 1040. So that means that, again, what may influence it a little bit is what's your business structure. But if you are a sole proprietor, your farm ID is going to be your taxpayer identification number, whether it's your social security number or your employer identification number. As far as state government is concerned, pretty much follows the IRS. Matter of fact, if you look at the New York State long form, you'll see as one of the lines on there is net income or loss from farming, is one of the lines on the IT 201. Somebody will probably correct me. I think that's it, the one. You'll see that it's right there. So not much as far as New York State is concerned, as far as what you need to do differently or between the state and federal tax returns. So that's pretty much it for me. And now I'm going to turn it over to Dayton to talk about hobby versus business.
Hey, hey, Steve, thank you. All right, can you see me? Can you hear me, Steve?
We can hear you. We're not seeing slides or your handsome face.
Right.
There you are.
How about now? That's better. Okay. Okay. All right. Good evening, everybody. Thanks for joining us. My name is Dayton Maxwell, and I work on the Capital Area Agriculture and Horticulture team. And Steve and I are colleagues. So, Steve, thanks for the great introduction. I have a handful of discussions this evening. The first one is going to be on hobby versus business, and we'll get right into that. So the idea here is if as a farm business owner, you want to present yourself to the Internal Revenue Service as a business. So I'm going to just talk about what you need to do that. So hobby versus business, what's the difference? And this is actually from the Farmer's Tax Guide, publication 225, which I'll reference later on as well. So in order to be considered a business and not a hobby, you're operating for profit, meaning your intention is to make a profit. If you are a business, the nice thing about that is you're able to deduct your operating costs of operation on the Schedule F. And it looked like some of you on the survey are already filling out a Schedule F. So good job. Kudos to the Schedule F people. All right. Let's see. So if you're considered a hobby, the condition is that you're not able to write off your expenses, but you have to report the income. So again, the good thing about being recognized as a business is you can deduct those operating expenses and reduce that taxable income. All right, so obviously the intent is to be recognized as a business by the Internal Revenue Service. So the IRS looks at a lot of facts to determine if you're a for-profit business or not, and we're going to just kind of go through those. Do you operate the farm in a business-like manner? I suppose that's subjective, but something they look at. Time and effort spent on farming indicate your intention is to be profitable. One of the things that I always encourage business operators to do is keep separate records and separate bank accounts. This is really something that says, hey, my business is a for-profit entity. And well, if you depend on the income from the farming as a livelihood, for sure, then it's a business. If losses are due to circumstances beyond control or are normal in the startup phase of farming, beyond control could be a natural disaster. A lot of times in the startup phase of farming, you won't have income for quite a long time. For example, vineyards and orchards won't have income for a while, but it's just naturally part of that startup phase. So still could be considered a business. Do you change what you're doing to improve profitability? That would say, yes, I'm in business to make a profit. Do you work with advisors that have a lot of knowledge to help you successfully carry on the business? Have you been successful in making a profit in similar activities in the past? Again, things that would say you are in business and not a hobby. Making a profit in some years based on can I basically reinvest profits into the business through capital investment and show appreciation of assets over time. This says that I am in business and not just a hobby. All right. So there's some rules here that we'll go over, but at the end we'll see that maybe they aren't. They're a little bit gray, and we can bend those a little bit. Farming is presumed a business if it produces a profit in 3 of the last 5 tax years, including the current year. All right, so remember the 3 of 5 rule. And if you're in the horse business, breeding, training, showing. In order to be considered a business, you have to show a profit in 2 of the last 7 years. So the rules are a little less stringent for horse breeding, training, showing, or racing in order to be considered a business. All right. And the activity must be substantially the same for each year within this period. And a profit is determined when obviously gross income is more than the deductions for it, which we'll see on the Schedule F in a few minutes. And if your business or investment passes the 3 of 5 or the 2 of 7, it is presumed to be carried on for profit and therefore recognized as a business and not a hobby. So that's cut and dry. However, if you fail the 3 of 5 or the 2 of 7 for equestrian businesses, may still be considered to operate a farm for profit if considering the factors listed earlier. So all the things that we talked about. So in our tax course in the fall, we had a guest speaker, Paul Vandenberg from Farm Credit East. And Paul mentioned a business that he had worked with a lot that didn't pass the 3 of 5 or the 2 of 7 rules. But he said he was able to go back and present the facts and the conditions of the situation that we mentioned before. And he said, huge long letter to the IRS, and they agreed that the business was existing as a business and its intention was to make a profit, even though it did not meet the guidelines. All right. So what about starting out in farming and you don't have the 3 of 2 or 3 of 5 or 2 of 7? You can postpone this determination. I'll just mention this form. In order to postpone the determination, you can file Form 5. This is a federal form, 5213, within 3 years after the due date of your return for the year in which you first carried on the activity. So looks like 3 years in, you can fill out that form and just say, hey, I'm going to postpone my profit determination, and you can work with your tax preparer on this. Or 60 days after receiving, or if the IRS sends you a notice and says, hey, we think you're a hobby and not a business, you can fill out the 5213 within 60 days. So, all right. Caitlin and Steve, that's what I have for my first go around tonight. Any questions?
Yeah, so I'm Juliana, and I apologize if I pronounced your name incorrectly, has her hand raised. Would you like to unmute and you can say your question, ask your question?
Hi, thank you. You did it correctly.
Oh, perfect.
I don't know if it's going to be addressed in the rest of your presentation, but in order for a farmer to prepare for the Schedule F, what type of documentation needs to be stored or organized, and what can be included in the Schedule F?
Okay, Julia, great question. Thank you.
For the Schedule F, should you have already the farm ID done or not? Thank you.
So yeah, Julia, let me see if I can answer your question. So the thing that you'll really need to take care of during the operating year, which is usually a calendar year, you'll need to keep an accurate accounting of your income that you receive from your farm products, and also the expenses that you incur during the operation of your farm. And I'll show you a Schedule F a little later on just to see what that looks like. And it's actually a very nice cash accounting chart of accounts, which you'll see. And then your next question Yeah, so it's helpful to have an employer and EIN number, although Steve, you can chime in here if you want. Your social security number may be adequate in place of an EIN. Steve, do you know the answer to that one?
I do.
Oh,
Dayton,
Joan, go ahead.
social
yeah.
security number is adequate in most sole proprietorship in situations, unless you would start to have employees or need to collect sales tax. Those are two situations that would require you to get an employer identification number.
And you can
Or a
get an
federal ID.
EIN. Yeah, you can get an EIN online in about 5 minutes.
Yep.
I was working with somebody the other day. You can apply and you'll have it back in your email in almost no time. So if you need one of those, you can get one. Julia, does that answer your questions?
It does. Thank you.
Okay, you're
Dayton,
welcome.
Dayton, may I add though, is that all the other thing that you need
Oh,
to
sure.
keep track of, income and expenses is important as far as for the Schedule F, no doubt, but you also want to keep track of any capital purchases, any machinery,
Yes.
anything that's a durable product durable good that you've bought that's going to last several years. You want to record that, because there are some other forms that we're not necessarily covering tonight, but there would be some other forms where that would have to be accounted for. Also, the sale of any capital assets as well. For the livestock producers, if you sold some breeding livestock, some a bull that would be used for breeding purposes, or seeing Juliana's picture there, an alpaca, a male alpaca or something like that, that would be that's a capital asset that you sold. So that would have to be tracked as well for schedule or for income tax purposes.
And I would add too, we, in our first session for income tax planning, as well as last month's session on record keeping, we kind of covered some of those topics. So if that's of interest to you, of what to keep track of and how long to hold on to it and whatnot, we can get those recordings and resources to you as well.
Amazing. Thank you. I was
Yeah.
about to ask that.
All right.
Thank you.
Yeah, Steve, thank you very much. And Julie, just like Steve said, very capital assets that you're purchased to use in the business. The IRS will let you expense those through depreciation. So, and we'll see that on Schedule F in a little bit. Any more questions before we?
Yeah, Teresa's got a question. Do you need an EIN to be considered tax exempt?
We're going to get to that in a little bit.
Yeah, because Tractor Supply is going to ask you that, right, Joan?
And you're going to tell them that you don't need one because you're a farmer.
Right.
So I can, and I'm going to go over that in later on this evening.
Okay, Joan, I'm going to turn, are you up? I'm going to turn it over to you.
Okay, great. I'm going to see if I can share my screen. All right, can you see my screen and my slides?
Yeah, looks good, Joan.
Okay, great. I'm getting better at this. Old dogs can learn new tricks. So anyways, just as a way of introduction, I'm going to be covering 3 things tonight. Basically a little bit on record keeping, a little bit on sales tax, and later on a little bit on the farmer's school tax credit. So we'll take you through those things as we move along. So that we will start from here. Just to let you know, I work as part of the Northwest New York Dairy, Livestock, and Field Crops team. And you can see the counties in red there are the counties that partner for support of that Northwest New York team. And I do farm business management work, as you might have guessed from the topic. So why keep records? there's a number of reasons to keep records. One is to monitor the progress of your farm business. Another is to be able to prepare financial statements like your balance sheet, your income statement, or profit and loss statement, it is sometimes called, to create a statement of cash flows or a statement of owner's equity. You also need to be able to identify the sources of your receipts, and you need to keep track of deductible expenses. And as we're talking about tonight, for preparation of your income tax return, and to support the items that you report on your tax returns are some of the key reasons that we keep farm business records. So what do we need to keep? First of all, Steve referenced the assets used in the business, and I'll talk more about those. We also need to look at our revenue and expenses. We may have employment records that we need to keep. We need to think about our accounting methods, the tax returns, and then a little bit about records retention is what I'll be covering here in the next few minutes. So assets used in the farm business. We have to keep those records at least 7 years following the year you sell the asset. And if you trade the asset 7 years past when you traded it, when the asset that you traded it in on was used. So if you were to take, let's just pick out a hay rake, for example, as a piece of machinery. If you were to buy a hay rake and then you decided to upgrade and get a better hay rake, and you traded the first hay rake in on the second one, until you sell that second one, you would need to keep the records that you from when you purchased the original hay rake. And so one of the things that I like to encourage people to do is keep a separate file for all your capital investments, all of those assets that you invest in for using in the business. Keep those all together in a separate place, because that helps you to keep track of this laundry list of things that we need to keep track of with respect to those assets that we use in the farm business. And so I think I don't want to go into all of those in a great amount of detail, or we will be here till much later than anybody wants to be tonight. But that gives you some information and some things to think about for those assets used in the business. The other thing we have to be able to keep track of is our income and our expenses. The income, at a minimum, we need to know the date we received the income, the source of the income, and the type of revenue that it is. And from the expenses, we need, on the expenses side, we need to keep track of the date purchased, the payee that we bought it from, and what was purchased. For employment records, pay date and pay period covered. For hourly employees, the hours and the rate of pay and any overtime. You need a work agreement, the job requirements, regular hours, as well as the pay, when they can expect to be paid. And we also have new requirements from New York State for keeping track of sick leave, whether it's paid or unpaid. And we have to keep track of our tax withholding from employees. Not a lot of folks are going to have employees, but that's some very beginning stuff on employment records. I want to talk a little bit about accounting methods. There are two types of accounting records. One is the cash accounting method, and the second is the accrual accounting method. In the cash system, we record income when we receive it, when we get the money, and we record our expenses when we pay money out for those expenses. On the accrual, or sometimes called double entry bookkeeping system, we record the income when the sale occurs, whether or not you've received payment, and you record expenses when they're incurred, even if you haven't paid for them. This helps to match the income and expenses to the production period on the farm. And that is one of the things that can be very handy and useful for management purposes. However, most farms, and the IRS allows most farms to use the cash accounting system. So we may, for management purposes, make some accrual adjustments at the end of the year to get a better picture of what our costs of doing business are. But from a tax management perspective, cash accounting is going to be the probably normal standard among farm operations. So when we think about bookkeeping or accounting systems, we have to think about how we use those things to organize our records and our transactions. Because in addition to our record keeping system, we have to have the backup, the proof that we actually spent money on the things we said we did, or that we received the revenue we said we did. So, I think of a number of those. There's the over the visor, dashboard, or console methods, all related to your pickup truck or vehicle that you do a lot of chasing for the farm with. That's probably not the preferred method. There's also the shoebox method. At least we've gotten it out of the truck or the vehicle and we've put it all in one place. And we've just sort of left it there. And then at the end of the year, we have a big party to sort everything out. That one can be a bit of a challenge. How many of you have ever seen one of these little devices? If I back up just a little bit. Maybe you've seen them in a restaurant that's near the cash register, and they put the receipts on the receipts for each order on a spindle. So there's another way, at least, that it keeps it in order by sort of when things happen, and maybe they aren't going to blow away. If that's the case, that was one of my father's tried and true tools. He put things on his spindle until he got them recorded into his farm record book. There's the monthly folder method. Many farms like to organize their records by month, and they have a folder for each month. Then we just tuck those receipts in that folder after we've recorded them in our record keeping system for the month. Other people like to organize them by vendor. And then we think about the way that we kind of start to keep records after we've amassed all of this information. And we look at either a ledger-based system, a system of columns for recording income and expenses, or a computer-based system. And so we talk about the chart of accounts, and Dayton's going to get into this, but this is a quick preview of the Schedule F. And you can see that Part 1 refers to the different kinds of income and how the IRS would like us to classify that. And then Part 2 looks at the expenses and how we want to classify those. Cornell Cooperative Extension does offer some handy tools. 3 different ledger books. We have a classic farm account book, we have a dairy farm account book, and we have a beef farm account book that you can probably reach out to your local cooperative extension office in your county and get a hold of any one of those ledger books, or another tool called the Cornell Farm Business Record. This book is more of a notebook style, and it allows you to keep track of all of, for example, the utility expenses on one page. And on another page, you would write all of your seed expenses. And on another page, you would write revenue from crops. And another page, maybe revenue from livestock. So those are some tools that are available through your local cooperative extension office. Another example of a ledger type of system is the OneWrite system, and these are available commercially. You can purchase a OneWrite system through a number of different sources, and basically you write the check, you write who it was paid to, you have the place to record the date, and then the check comes out, but then you have the columns to the right of that to spread that expenses out into what category that expense went into. So that's a handy tool that a lot of people like to use. Computer-based systems. It's the software that does the work when we're using a computer-based system. Some personal software that people sometimes use are Quicken or Mint, or there's a whole laundry list of different computer-based systems out there. And then for businesses, many people use QuickBooks. That is a fairly inexpensive record-keeping system. that is computer-based. It really drives off of your checkbook ledger. And then another is CenterPoint. CenterPoint is in New York State, in the Northeast. It is available through the Farm Credit System, and you can get into a lot more detail than you might be able to within QuickBooks, within CenterPoint. Others use Peachtree. One of the things that I think is really important is you are selecting what you're going to use for a system, whether it be a computer-based system or a hand-kept system, is a system that you and your tax preparer or accountant can agree is adequate and serves the needs for your business. So that is one piece. And then some other things to think about when you're selecting a bookkeeping system is, do you sell everything wholesale in large lots with revenue coming in a few big chunks every year? Or do you have a retail focus? Do you handle a lot of cash? Do you accept credit cards? Do you need to be able to create receipts from at a point of sale? Do you have online sales? Again, that employment. Do you need to keep payroll records? And then do you have loans, lines of business, or credit cards with which you need to keep track of those items? So I think those are important pieces to think about, and how you're going to deal with them in figuring out the system that's the easiest for working with them. Oh, well, things kind of shifted around on my slides here from what they looked like when I put them together. But as we think about the records retention, income tax return, and the income and expense records, 3 years following the year the taxes were paid or filed, whichever is less. And then those assets and the depreciation schedule until at least 3 years after either the asset was sold or any replacement asset that you traded it in on was sold. Employment records, 4 years after the last date the employee worked for you. And I'm just going to slide in here a quick plug. The Cornell Agricultural Labor Development Program starts a program on onboarding that would help you with a lot of the compliance things if you have a business that employs people. Their next session of that starts on the 21st, and the link here that you will receive when you receive the slides is where you can register. And then there's also a template for that onboarding, which gives you a place to kind of start to develop your system for onboarding employees. So those are some tools that can be there for you to take advantage of if you do have employees and want to learn more about how to keep those records and be in compliance with all the things related to employees. So our records keeping system, one of the keys is it has to be organized. You have to be able to retrieve the records for your own use or in case of an audit with the IRS. So for your own use, maybe you buy a part, you put it into a piece of equipment or use it to repair something, and then you find out the part's defective and you need to return it. Or the part had a 3-year warranty and you now it's 2.5 years later and you need to be able to find that receipt in order to be able to return that item and get credit for it. That would be sort of what we need for that. I pulled this other table right from the publication 225, the Farmer's Tax Guide, that gives us if the payment is by check, and then this is the information that we need to keep for those different types of transactions. So that's just some more details on what needs to be kept track of as you're working out and developing your record keeping system. And then I'm going to pause there for any questions on record keeping.
Looks like Juliana has her hand raised. If you want to unmute and ask a question, you can go ahead and do that.
Oops, forgot to unmute. Sorry if you mentioned it and I misunderstood. So when you say if the payment is by check, and then we have to have the check number, so on, is it just for salaries, or like if I pay something, like if I purchase equipment by check, I have to prove a check number?
That would be correct. You understand it right. For anything that you purchase by check, this is the information that the IRS is going to look for to be able to go back and reference that. And then they're also going to be, you also need to retain the backup receipt. So let's say that you go to a supply store to buy a number of different things. You're going to buy some row cover. You're going to buy some seeds and some hand tools. You will need to keep that receipt that shows that you purchased those items. And then if you paid it by check, and within your bookkeeping system, they need this information referenced. One of the handy tools that I like to do when doing bookkeeping, and I did bookkeeping for a heavy excavating business for my husband for 25 years or more, is I like when I pay a bill by check, I write the check number, the amount that I paid, right, and the date that I paid it right on that slip, so that if I'm ever in a situation where I've got to go back to an audit, now when they look at my ledger and they say, we'd like to see what you paid for with check number 723, I can go and dig in my pile of records that I've put away and organized personally by vendor, then by date, because I'm one of those bookkeeping, accounting kinds of people, and those kinds of things need to be organized in my world. You know, I'm going to go to the attic and I'm going to bring down my box for whatever year, and then can go back and reference that pretty easily. And if you have an electronic system, the main thing is there are all kinds of rules and regulations about that, and a whole IRS publication about if you scan everything and keep it electronically, what standards it needs to meet. And that goes beyond where we are tonight.
Mm-hmm. Yeah,
Does that help, Juliana?
It does. I personally do that, or like I write down the checks for myself, for my personal, like if I need to track that. I never thought that I would have to show that to the IRS. I thought just the receipt is enough. I mean, thank you.
You're welcome.
We did have one more question too. What if we receive cash for payment from customers?
So if you receive cash for payment for customers, then you need to keep sort of a log or a ledger of that cash that you've received during the course by date. So I'm going to just go to an example of somebody selling at a farmer's market where things are going on fast and furious out of your cash box. And you're not probably going to generate a receipt for each of those customers. But at the end of the day, we need to be able to show how much we charged for taxable items and how much we charged for non-taxable items and taxable items and sales tax, and non-taxable items, and keep those separate. So I think that's one of the things that is important if you have a mixture of taxable sales and exempt sales, that you have a way of tracking that at your point of sale.
And then
That's when the cash register comes in, or a point of sale transaction system comes in.
And then someone had a follow-up question to that. What if you pay bills with cash? How would you track that?
Again, on that receipt, the fact that you paid it and you paid it with cash and the date that you paid it is a really good way to make that note. One of the things that I have encouraged, and the other thing that helps, is it's really important that you keep business cash and personal cash separate, so that if you have a petty cash account that you're paying business bills from, you want to keep that petty cash account and reconcile it to those receipts and bring it back to the amount that you normally would keep in petty cash. And it really depends on the volume of your business, whether you do that daily, weekly, or monthly. But the more business you do, the more frequently you need to reconcile your petty cash against the receipts that you've spent out for that. Typically, that's something that happens often, especially if you have some kind of a restaurant business associated. Many of the vendors that do business with restaurants want to be paid in cash when the delivery is made.
And then, so the question is, so you need bank statements for date posted to institution. And that was from Philip. So I don't know, Philip, if you were just looking for clarification or if you had more to that question too.
Hey, Joan, this is Caitlin, this is Dayton. Can I add a comment? Is that okay?
Sure.
Always.
So, Joan, perfect answer. Awesome. But I just want, and I'm not encouraging any illegal activity here, but the IRS is nobody's friend. I don't mean to be harsh, but when you're dealing with cash and anyway, that's all I'll say. I don't want to get myself in trouble and blah, blah, but just use discretion. Joan's answer was textbook, but the IRS is not your friend. Okay, I'll stop talking now.
The other thing I would just say is the IRS does have some models and certain expectations that they're going to look at. So for example, if you're paying, if you have receipts, and the best I can talk about this is with respect to restaurants. But if you have receipts for this is, or bars, this is the amount of liquor I bought, you better be able to show sales of that many drinks. That's the, because they actually in an audit situation will drill down into that, particularly the sales tax folks. They're very good at that kind of thing. On the other hand, if you've planted seeds and you have produce, you might have had a bumper crop year and you might have had a bust crop year, and nobody knows that but yourself and your conscience.
Thank you, Joan. And then Juliana added a really important comment that I read in the news that the IRS will now be able to look at transactions from PayPal and Venmo. Lots of small farmers use these two platforms. So that, goes back to record keeping that Joan was talking about, making sure that you're tracking those sales and accounting for those sales as well.
Yes.
And then is there a difference between wholesale versus retail in terms of taxes?
I'm going to say yes and no. And the reason I say that is from an income tax perspective, there's not a lot of difference other than usually if you're selling wholesale, there's more of a trail of receipts for what you've sold because you took a load of something or a bin of something and you usually either sold, you went to the produce auction and you got a receipt back that you sold it at the produce auction, or you delivered a load of grain and you got a receipt back that you delivered this many pounds of grain to the elevator. Those kinds of things in that world, we have, fewer transactions and usually more traceable from the as far as the income source goes. And so that's the main difference between the two.
And I think that would be.
But when we get into sales tax, there's another whole world out there we'll talk about later.
I think that's all of kind of the broad questions that we have right now. So if you want, we can
move on to DBAs.
Mm-hmm.
Okay, so doing business as or DBA. This basically is a tool to inform the business that you're doing business under an assumed name. So that instead of doing business as yourself, John Smith, you're doing business as Smith's Farm, you need to file with the county clerk if you're a sole proprietorship or a partnership, and it's a simple doing business as form. If you are an LLC, a corporation, or an LLP, you have to file with the New York State Department of State, and you have to find out if that name is being used by someone else first in New York State. So that is a couple of those. Just a couple of handy tools. One related to the DBA, but other general starting business in New York information. I just grabbed from the Monroe County website. This is the example of the DBA form. Each county clerk's office has their own little DBA form. It's not very difficult to figure out. You basically have to have the name and address of who is operating the business, and then what's the name and address that you're working under, and how do they reach out and get in touch with you. Fill it out, have it notarized, and file it with the county clerk. And most county clerk's offices have someone on board there at the county clerk's office that can notarize that for you. One of the things that may be required if you are going to get a bank account under Smith Farms name, then if you're going to have a Smith Farms bank account and you're a sole proprietor, they're going to have to see a copy of your DBA certificate. The other thing that's important is if you ever close up shop, it's important to go in and discontinue that doing business as, or if you sell it to someone else and you're transferring that. So that's some things to be aware of. And then I just like to for anybody that's starting a business in New York, is starting a business in New York, a guide to owning and operating a small business has a lot in there for every type of business. But I think it's a piece that farmers can find useful, as well as some great tools that exist on the Cornell Small Farms website that you can reference as you need to find out about different parts of starting up a small farm enterprise. They have a lot of fact sheets available on their website that deal with that in their guide to farming in New York State. So now back to Dayton for some income tax considerations for farmers.
All right.
Oh, Juliana
Thanks, Joan.
has another. I see Juliana has a question.
Sorry, guys.
It's okay.
That's okay.
That's what we're here for.
Yeah, so for the DBA, specifically, so I have a LLC under with one goal, which is more like promoting herbalism and selling herbal products and so on. But now I am also starting, I am a sheep farmer now, and I will be selling fleece and fiber products and so on. My LLC does not have, it has a specifically, you have to write like, what is your goal? What are you gonna do? Can I file my income, revenue, and expenses of sheep farming through the LLC that is herbalism? Does it make sense what I'm asking?
Yep, it makes sense what you're asking. And the quick answer to that is, if the first business is already a farming business, and you're filing farming taxes with that, then you could amend that charter with New York State and include this income from sheep farming within that, so that it's not so that you haven't specifically limited that. Or if that business is filing a Schedule C as a small business, then you may need to file. Then you might need to file your Schedule F separately, your sheep farm Schedule F separately. So that really depends, and again, that's where I would be talking with that tax preparer, asking those questions. They will be the one that can guide you on that.
Okay, thank you.
Dayton, Steve, anything else to offer on that?
No, not on that, just a couple things, Joan. There was a comment out there about business should work on, let's see, from Michael, just looking at it. Says new farms should generally be concerned about building equity in their business and saving on taxes, and that's a great point. And if a business is generating a profit and reinvesting, then you'll have an opportunity to manage your taxes through depreciation of capital reinvestment. So that'll kind of take care of itself. Great comment, Michael. And I just also wanted to say that I've worked with a lot of farmers, and one question that I always ask is, do you have a business entity? And they say, well, I have a DBA. And Joan, you made it very clear, and just wanted to reinforce what you said. A DBA is not a business entity. A DBA is just a public statement saying I'm in business. And in many cases, I would talk to farmers that had a DBA name that was a certain name, and a business entity, for example, an LLC, that was another name. So they had two different names. So I would encourage you, if you are filing a DBA, to make that align with your business entity name, just because it makes life easier for people lending money and things like that. All right. So, okay, Joan, let me see if I can get you to, I think this is where I want to be. Let me check. Yeah, okay. So I just want to spend just a moment and so with regard to federal income taxes, the holy grail of information, the greatest resource guide on the planet for filing taxes in the United States is publication 225. And this is, you can get it online, you can have it in a second. Just a really wonderful resource. I actually enjoy reading this. I'm probably one of the few people ever on earth that like to read this thing. Maybe Joe and Steve do as well, but so just to kind of go down through the headings here. What's new for 2021? What's new for 2022? As we talked, record keeping, accounting methods. Joe mentioned those, cash and accrual. What's considered farm income? What's considered farm expenses? Soil and water conservation expenses. Basis, or your cost of an asset, what you spend on an asset, how to deal with that. Depreciation, gains and losses, all these neat things. Installment sales, self-employment tax, employment taxes, all these things. So really just a really nice resource, and just wanted to, so if you have questions about farm income taxes on the federal level, this is the place to look. Farmer's Tax Guide, and probably some of you are looking it up right now. Okay, and just wanted to show this. Joan gave you a picture of it earlier, but this is the Schedule F, and I had the luxury of engaging with a lot of farmers in my life, and from a lending capacity, the first thing I would ask is, do you file a Schedule F? Because that kind of says that, says to the, is a federal document that says I am a farmer. So here it is. Just go through it very briefly. Let's see, if we look at the top here, name, principal activity, there's a code for the activity that you undertake. Your accountant can do that, figure that out. Is it a cash or accrual return? I would assume almost everybody would be a cash return. Recording income when it is received, and expenses when they're paid. Employer ID number. If you had, like Joan said, if you're collecting sales tax or paying employees, an EIN is necessary. Otherwise, Social Security number should work. Just ask some questions about your participation in the business. And then just the top side is the income. And so sale, and these are fairly generic, okay? On the income side, I would encourage record keeping that is more detailed than the Schedule F on the income side. Sales of purchased livestock or other resale items, cooperative distributions, just reading down through agricultural program payments, CCC loans, government income, et cetera, et cetera. So most of you will have produce that's here, sales of purchased livestock or sales of livestock produce, grains, or other products you raised, something you bought and resold, or something you grew on your farm, and maybe some custom higher income, et cetera, but fairly generic on the income side. However, when you're building a chart of accounts on the expense side, I often recommend that people refer to the expenses here for a good chart of accounts, because if you keep your records like part 2 of the Schedule F, farm expenses, it really works well from a record keeping and also tax preparation standpoint. And these are pretty good. Car and truck expenses, chemicals, conservation. Line 14 is the place where income taxes are managed. So we mentioned it, keeping track of capital assets in your business and depreciating those capital assets. This is line 14. So I think it was Michael that said, grow the business, reinvest in the business. In doing so, you can manage your taxes, income taxes through depreciation, and that's line 14. All these things: feed, fertilizer, fuel, insurance, interest, mortgage interest, or other interest. And let's see, just kind of going down through profit sharing for employees, vehicle expenses, repairs and maintenance, supplies, all these kind of things. So there it is, there's Schedule F. And I think what I'm going to do now is just show you how Schedule F flows into your regular tax return. Let me get there. Oh, is there a question there? I think I just saw a question. Let me take a look.
There's a ton of questions, Dayton. So I think that
Okay.
we continue your current train of thought, and then we'll circle back.
Okay, and we'll come back. Sounds good. Okay, I'll just and I think we're almost finished with this deal. Let's see, share screen. Okay, so right, so I think it was maybe 2019 the IRS 1040 change. Maybe it was 2018. But Schedule F now flows into what's called a Schedule 1, and here's Schedule 1. So the profit or loss from Schedule F will flow into Schedule 1 on your Form 1040. And here it is, farm income or loss attached to Schedule F. And then it flows to the front of the 1040, and we see Schedule 1 right there. So front of 1040 formerly was much more detailed, but now the IRS is elected to use Schedule. So that's kind of how it all connects. And I think that is, let's see. Oh, and this is just, Steve mentioned this in his introduction, that the New York State tax return, the IT 201, and here is 13, line 13, farm income or loss. There it is right there. So yeah, so that I think is it for that. And Oh, let me just, yeah, I think this is actually the last slide. Let me, yeah. So managed taxable income. Quick story here. We were at a farm meeting in Ghent this fall, and a young man there said he had a big farm and his wife was a doctor and she earned a lot of money, and the farm allowed them to offset her income. So again, managed taxable income by farming. Not that they're doing anything wrong, just following tax rules, but they were able to manage taxable income through the farm operation. We mentioned Schedule F line 14 is a great place to manage taxable income and reinvest in the business. Must show a profit motive, and good businesses do pay taxes. And if you ask any farm lender, they'll tell you that they have to use the most recent 3 years of tax returns to try to make a lending decision. So if the tax returns are such that you show 3 years of consecutive losses, it's hard to loan money in that situation. So, all right, I'm going to stop right there. And Caitlin, go ahead.
Sure. So here's my thought. We've got a bunch of questions on different topics. I'll go through them. And if it's something that you guys are planning to present on later, just let me know and I'll keep it separate and we can come back around to it. We also were scheduled to take a break, but if you three are okay with that, I think we just forge ahead at this point. Does that sound okay?
Yeah, let's go.
Let's go.
Okay. So first question, who needs a Form 1099 when expenses exceed $600? Professionals, contractors, suppliers, and how do you file a late 1099 miscellaneous if you forgot to do so in the past? Thank you.
So everybody needs a 1099.
No, not really.
No, don't go ahead. You say it. Go ahead.
Anybody that, I guess, as we think about a 1099, a 1099 needs to be filed for anyone who is not incorporated or is not an LLC or an LLP that you are doing business with, who is providing you with services. If all they provide you is goods, you don't need to. But if they're providing services or rent, or you're paying them rent, then you need to file that 1099. And the 1099 only has to be filed on services, and it's for anybody that you're doing business with that you pay more than $600. That is either a sole proprietor or a partnership, basically, and they are providing services greater than $600. It does not relate to goods that you buy from people. So one place that sometimes comes into play is, not so much anymore, but once in a while you'll still find an attorney that's a sole proprietor. That's usually for services. You may find sole proprietor veterinary practices where you're buying both medication and services, or oftentimes some of the people that are doing custom farm work, they're providing you with service. So those would be some of the situations where you would need to file that 1099. Basically, you can get the forms from IRS. If you have not filed it and it's late, there can be a pretty good sized penalty associated with that. So I think first of all, encourage everyone to file them on time. And secondly, to do a late one, I guess you'd have to figure out which tax year it was for. And I'll be kind of honest here. I might take my chances. If it's been more than a year or two, I might take my chances and just let that thing slide on. But basically you have to have the correct form for the correct year. And then there's a transmittal form. It's a 1096, so that if you give out 10 1099s, this basically says to the IRS, here's the 10 1099s that I sent out. And you send that along with that. And if you Google 1099 or 1096, there's a whole IRS publication on it. Just for you.
And this is a good reason why it's important to have a tax preparer that has worked with farms and you can ask them these questions because it really does kind of depend on who you're paying to. Okay, the next question, where in part 1 of the Schedule F should profit from education programs on farm and agritourism be considered?
Boy, so I would say they're not Schedule F items, right, Joan? Aren't they? Because it's produce. Right, aren't we looking at talking about a Schedule C maybe for entertainment?
I think if it's very minor to the agricultural enterprise, then agri-tainment can get in there. There's like a most miscellaneous or other income under part 1. But if it's a substantial part of the business, then you're talking a Schedule C. And
Yeah,
then
I would
seek that advice
say
from your tax preparer.
Farmer's Tax Guide. Check out the Farmer's Tax Guide for that one.
Yeah. And I can dig in there for a minute.
And then clarification, and this might come up later, we need to charge sales tax on flower sales, but not veggie sales. Correct?
That is correct. And we'll get more into that in a bit.
Perfect. And then how to report Social Security tax? And Sarik, if there was more to that question, feel free to type it in. I'll keep an eye out for it.
So Social Security tax, that publication is Circular A for federal taxes. It is the Agricultural Employers Guide to Employment Taxes or something. Might not have the publication title quite right, but it is Circular A. Steve,
No, but that's for employees, right? Employer-employee relationships, right?
that's if they're paying it on an employee. If
Right.
it's on your own self-employment tax, then that self-employment tax is paid right along with your income tax return. You file a Form SE along with your Schedule F and your 1040.
Okay, and cost basis of assets, how to value when brought into the business or when it was purchased if you already owned it.
So basically what you paid for the item would be the cost basis if you purchased and brought into the business. If you already owned it, say you're transferring personal assets into an LLC, I would say market valuation at the time that is transferred would be a good place to start. Any comments on that?
But
Joel
that
or
can't be
Steve?
any bigger than cost value.
Yeah, it can't be bigger than cost value, right? Yep.
Okay. The federal and state have different expectations or understandings of income to be considered a farm or have farm income. But in the first year, if you had more investments in costs and no income, can you still file a Schedule F?
Yeah, I would say yes, based on the factors to consider your profit motive. Absolutely, you can file Schedule F. Joan, what do you think?
I would agree.
And if you use,
And the other thing I would say is the definition is not that different between New York and federal. There are some definitions that you get into about who can get different exemptions in New York State. But that is more a definition of who can get the exemption, not whether or not you're a farmer.
Next question is, it's kind of a few questions that everybody has. So if you use a barn or a part of your home as business use to store tractors or use as office space, is there a way to value that or deduct that cost or depreciate out those costs?
I would develop a lease arrangement between your business and the space maybe, and rent the space from your, your person. Joan, what do you think?
That, or if it's your home, there's a business use of home form that you can utilize, and it's based on the percentage of square footage in the whole house, and that's another form that you would file along with your return.
And then along with the home question, how do you value the use of electricity, internet, and some of those other utilities as your farm home office?
Percent
Again,
of the,
that's a percentage of square. Well, it depends on a lot of factors here. So let's start with electricity. And if you have you need to be able to look at what electric bills are for a typical family in your community that is not farming, and that part probably is what you need to consider personal use, and the remainder is business use. If you're looking at phones, everybody has a phone line coming to their house, is the way IRS defines it. So you cannot charge for the phone, but you can charge for the long distance. Cell phones, those are, again, one of those gray areas that, if it's the business's cell phone and you're using it for business purposes, if you're using it for business and personal, it gets a little challenging to be able to say that's a deductible expense, but I'll let you make those decisions. And then the utilities, as far as if the utility for business use of your home office, if you want to just take if the home is on a separate meter, or it's getting its own propane or natural gas, then that's based on the percentage of square footage. The other thing that's really important, if you're going to use business use of home, that has to be used exclusively. And there we go. Bonnie, you're the better person than I am to answer these questions.
All right, yeah, business use, I try to put it in chat a little bit. It's got to be used exclusively for that. You can't use your kitchen table and then try to write off the kitchen table as office expense. The IRS will not take that as a deduction. And the easiest way you do it is you do take the square footage of your total living space and take the square footage of your office space and get that percentage. And that percentage is going to be used for taxes, utilities, whatever expenses you have for the home. Landscaping you cannot take. I'll tell you that one, because I know people that have tried it before. That's not one that takes, but I hope that helps.
Thank you, Bonnie. And I'll also add too that the farmer's tax guide that Dayton and Joan have referenced has several pages all about expenses, what you can deduct, what you can't deduct, how to figure it out. So if you ever are having trouble falling asleep, we recommend reading that.
Is Dayton the one that said he loved to read 225? That's great.
yeah, I like it. Yeah.
Yeah,
I do.
and there
Every
is
year or two,
one-
you got to read the whole thing, don't you, Dayton? It's just part of life.
Yeah.
There
bless
is one
you.
specific for home office use, because there is one specific for that also.
Mhm. So it looks like that's all of the broad questions that we have right now. So I think we are safe to move ahead.
Joan, I think you're up, correct?
I think, isn't Steve up on
Steve.
ag assessment?
Oh, yeah, sounds good.
Or else I've got the wrong agenda.
Nope, looks like Steve on my end too. And then while Steve's getting his stuff loaded up, there's a follow-up question on using a part of a barn for a farm business. If you're renting a barn area to yourself, then you would file a Schedule E, question mark?
Yes.
Thank you.
Okay. Yeah, like I had to restart my computer, and fortunately things are haywire. But I think I can muddle along and not necessarily, and for the sake of time, not necessarily use PowerPoints. They're crux anyway. Anyways, so the next part that we wanted to talk about was ag value assessment. And so we're kind of shifting gears. I think really great discussion about income taxes, both state and federal, but now we want to also touch base on some other types of taxes or taxes related to operating a business. The first one wanted to touch base on is the ag value assessment. Notice many of you have been farming for a while and are generating income. So depending on the size of your business, if you're generating more than $10,000 worth of gross agricultural sales, you're able to get ag value assessment on the parcels of land that you use. Misnomer is, and it's a combination of owned and rented land. It's sometimes we run into an issue with it when in some parts a town or an area where the assessor is saying that, well, document that you're producing $10,000 worth of gross of agricultural sales on that parcel, and that's not how the law is written. You have to take all of the parcels that you're using, put them together, and then that's how the income generation or those parcels are used to generate $10,000 or more. Do you have to own land? No, you do not have to own land in order to get ag value assessment. You do have to rent land, okay? And any rented land, obviously the ag value assessment is going to go to the landowner and not directly to you. But my years of experience is that ag value assessment can be kind of a enticement or a carrot for landowners potentially to rent their land, because it is a savings on the real property taxes for them to rent their land to a farmer who's eligible and is generating the income, the agricultural income, to be able to get the ag value assessment. So there is a form, it's form RP 305 and that's what's called the long form. There is also a short form. It's really up to, so initially, if this is the first year that you've applied for ag value assessment, then you would need to fill out the long form, and it's just more questions, more detail. One part of it that is important, that's important and critical that needs to get done is that the Soil and Water Conservation District offices in your county, there is a soils worksheet, and a technician or someone in that office has to complete that. You cannot do it yourself. Or the extension educators on here. You have to go to the Soil and Water Conservation District office to have that completed. And the deadline for filing for agricultural value assessment is March 1st. So here we're getting towards the end of January. I would encourage you to make an appointment with your Soil and Water Conservation District office to, if need be, to get that soils worksheet done. Now after that, then there is what they call the short form, which asks for a lot less information, and that has to be, ag value assessment has to be applied for each and every year. But as long as the assessor's not requesting you to fill out the long form, you can file, or the landowner that is renting land from can file the short form. If you are renting land, the landowner also has to complete, I think it's RP 305C. I was looking it up today. Let's see what the question is does there have to be a lease? And yes, there does. It has to be a written lease. Now we're not attorneys, We're not saying what that lease should entail, but it should be. I always tell people that the a legal document, it's going to help protect both parties. And so, scribbling something out on a piece of paper is not something I would recommend. But if that's what you say, so be it. But you can run into problems. That being said, is that if you have a written lease, it has to be 5 years. Now, things I always tell people is that you can always have an opt-out clause in there so that you're not necessarily locked into the 5-year period. But there is, and thank you, Caitlin, RP 305C, she put that's the affidavit that also has to be filed with the RP 305 paperwork to prove that a written lease is in effect. So yeah, once so Michael asks, is this, it's not 10, he asked, under 10 acres had a higher minimum income, and it's not 10 acres, it's under, 7 acres, and 7 acres is 10,000. If it's 5 acres or less, then it's $50,000. So that's how that, and the reason why it used to be 10 and they dropped it back to 7, or maybe it is 10. I'm sorry, I don't have my notes in front of me. What would you say, Joan?
It's 7.5, I think.
Yeah, or something like that.
I'm going to pull it up right now because I'm all sorts of confused. So I'll pull it up and link it and copy and paste it in the chat too.
Right. No, and so Gabby asked, this is multiple businesses in the same town parcel. Does each business need to generate the $10,000 for Schedule F? That's a schedule.
Hey, Steve, sorry, if I articulate, it's better through
Sure.
text. So for tax exemption, in a tax parcel that is, let's assume 25 acres, and 2 businesses are running there. 2 lease business. So how that works with the owner of the parcel when they go to tax that parcel.
Yeah, that would be, it would be as long as, well, a variety of scenarios. It would, Gabby, hi, it's good to hear from you. Let's make this simple and not get into subletting and all that stuff. Let's say that the landowner has 2 clearly written lease agreements. Farmer A is leasing, let's say 10 acres, okay, or 12 acres. Let's say so we get away from the 10 acres. Is leasing 12 acres and Farmer B is leasing 12 acres. So in the leases, they say, clearly state that each farmer is renting 12 acres, give a description of land, so that if in that case, in my mind, it's 24 instead of 25, but the landowner would be able to get ag value assessment on the 24 acres that they're renting to the 2 separate farms. Does that make sense?
As long as the 2 business generate more than $10,000, because assuming that one business have more years and the business B is just starting, maybe it's business
Okay.
B didn't reach the $10,000 mark. So that it's my question too.
Right.
And
So
Steve, thank you.
Well, I mean, and I'll let my colleagues jump in here. In that case, if all the parties were agreeable, the farmer that the business that is definitely meeting the $10,000 threshold could lease the whole parcel, and then have as long as the landowner is comfortable with this, and it's not in the language in the lease between, say, farmer A is the one is meeting the $10,000 threshold. Okay, they have they have a lease agreement with the landowner. As long as the landowner has not put a clause in there that says that farmer A cannot sublet the property, then and if all the parties are working together, hopefully that it wouldn't be an issue. Then farmer A could sublet the whatever acreage farmer B wished to use, but because the land owner is leasing all of the land to farmer A, then the landowner would get the ag value assessment on all of the acres that are being leased from farmer A. Does that make sense? Okay.
Yeah,
Yeah,
thank
Steve,
you.
It does.
Okay. But the caveat there, the sticky part is that will the landowner allow subletting? And I would strongly encourage that all in this scenario, all three parties really need to be in communication, know each other, and have trust among themselves. Yeah, so it is 7 acres, an average of $10,000 gross sales, or 7. That's right, 7 acres with over 50,000. And what Caitlin didn't find in this, I do remember, is that for a beginning farmer, it's an average of $10,000 over the previous 2 years. That a couple of years ago, that was changed so that in the first year that a beginning farm generates $10,000 in the file. Let me use this example. Say in 2021, a beginning farmer finally reached the gross, and remember the key here is gross income of $10,000 in 2021. They are now, they do not have to meet the average rule. In 2022, they can apply for ag value assessment on rent and owned land that they are using in their farm business. Yeah, that's great. Thank you, Caitlin. That's right there, page 8 of that.
So it's got different Christmas tree, horse owners, beginning farmer, all of those scenarios are laid out. And the other thing, just from experience with different farms too, if you call your town or county, usually your county assessor, if it's a more rural county, and just ask them and explain your situation, they will be able to help walk you through the process and see when you could qualify, or if you already qualify for it.
Right. Show my bias a little bit. I find I have a little bit more confidence in the Office of Real Property Services in each county than I do in an individual assessor.
That's probably what I meant to say. Thank you.
Yeah,
Yeah.
I'm just more pointed. That's all, Caitlin.
They're all the same in my book. So
Yeah,
those people.
there's and you know we're giving you what the law says that you're entitled or eligible for. It still comes down to the assessor in your town. And you know, be quite honest, you might have to do some education, or as Caitlin was trying, and I more pointedly say, you may have to go to the Office of Real Property Services in your county to get the issue addressed. So moving on to structures, quickly, any permanent agriculture or horticultural structure is exempt from agricultural value, from being assessed for a 10-year period, and it behooves you as a landowner or the one that constructed this building is that as soon as it is put into service is to make sure that you file the form. And I believe that's RP 483 is a form that does that. And that is, there's no time, like there's no deadline of like March 1st for that filing of that. Whenever the building's being placed in service, let's say that you completed it in July. So in July, you want to fill out this form and take it to your assessor or the assessor's office, so that structure is not essentially on the tax rolls for a 10-year period. And then after that, it will be added back onto the tax rolls, but it will be added back in, or the value will be calculated as a depreciated value, not the value as when you put it into service. There are some things that are permanently exempt from real property tax. They tend to be more temporary things, and or bulk tanks, for example. On dairy farms, bulk tanks, instead of taking up a lot of room in the milk house, they just a tiny portion of it is in the milk house itself, and the rest of it's sitting outside. Well, somebody many years ago thought, well, that's a structure, and so it should be taxed and assessed as. But New York State did exempt bulk tanks, grain bins, cover all buildings, temporary greenhouses are all examples of structures that are permanently exempt from being assessed and taxed on your real property tax. So for the sake of time, I'm going to stop there unless there's some questions. Anyone has any questions about buildings and structures? Okay. Is it you, Joan?
I think I'm up on sales tax.
So it's RP 483 is the agriculture and horticultural building exemption form.
Okay. Just one moment. I am not finding my item I need to share. We'll see if I can do this again. Have more success. Ah, there we go. I always forget about that little show all windows. Okay, there we go. I think I'm up and ready to talk about sales tax. First of all, let's talk about what you need to do to be able to collect sales tax. And the first thing you have to do is, before you collect any sales tax, you have to obtain a certificate of authority to collect sales tax from New York State. Any business that sells taxable products, even if their sales are to organizations that are exempt from sales tax, must have a certificate of authority and must file timely sales tax returns. And I underline, bold, highlight, anything else you can think of about timely. If sales tax returns are not filed in a timely manner, there is nobody that will be your friend, and you will pay the penalty. And you will pay the interest on any tax that was due for the time that you have not filed it. So if you get a certificate of authority, the next thing you do is you mark the dates on your calendar when your sales tax returns are due, and you file them in a timely way. Because if you have no tax due and you have to pay a $50 or $100 fine, that's no fun. And there's just no way around it. So those are the rules, and the state is very serious about them. Even very small businesses start out with the requirement for quarterly filing. Depending on the level of sales, you may be a weekly or a monthly filer as well. But After a year, if the total sales tax you collect is less than $3,000, then the state can grant you permission to file annually instead of quarterly. So before you can apply for a certificate of authority, you have to have an employer identification number, because that's the number that the sales tax folks are going to use as your sales tax collection number as well. That is available through the federal government. You can apply online. As Dayton said earlier, it takes about 15 minutes. You can apply by fax. You can apply by writing. I encourage you to first thing, download the form SS4 and gather that information, because when you go on to apply online, if you don't have all the information, you can't save it and you have to start over again as you're filling out that form. Otherwise, if you get yourself a copy of SS4, get the information down on that, and then you can go back in and you can fill out that form in 15-20 minutes. And it doesn't take very long after that. And you will have an employer identification number in hand. Then you can in turn go to the sales tax. So let's talk about exempt sales and taxable sales. I will say, first of all, food is the primary thing that farmers sell. There may be some medicines that you would sell that are tax exempt. Most other products and services are taxable. Some of the common ones that people ask me questions about: firewood, taxable. Horse boarding services, taxable. Just trying to think of a few other things that are taxable. Flowers, taxable. Plants, taxable. So there are many things that are taxable. Now, you may be selling taxable items to someone who is exempt from paying sales tax. Either they're an exempt organization or they may be buying those items for resale. You need to have an exemption certificate on file if those folks are buying things from you and they are not going to pay, and they're not taxable at this point. So I think that's one of the things that's very important as you move forward. There's some great resources out there. How to register for New York State sales tax is basically a step-by-step guide to how to do that. And then a guide to sales tax in New York State gives you lots of good detail on the kinds of on all kinds of questions related to sales tax. So I'm not going to spend a tremendous amount of time going into all of those how-tos because when the time comes for you to do that, you can, you can pull up these slides that you'll have in hand and click on these links, and it'll take you to the information you need as far as registration. And then when you get into more detailed information on how to file your returns, those kinds of things, that's all in the Guide to Sales Tax in New York State. A more common question that we get from farmers is information about the sales tax exemption for farmers in commercial horse boarding operations. And this is the form. It's ST-125. You can download it from the state website. If you just Google ST-125, New York State ST-125, it will bring you to this form and you can download that. If you are a farmer, you do not have to have a sales tax number in order to get a sales tax exemption. If you operate a horse boarding operation, however, because what you're selling is taxable, you must have a sales tax identification number and you must put it on this form. The other thing that's really important is the items that you are purchasing must be used predominantly to produce predominantly in the production of farm products. And that means more than 50% in the production of farm products. This form can be filed either as a blanket certificate, meaning you file it once, and then you don't have to file it again with the vendor. They will make, basically look and say all of your sales are exempt and not charge you tax. Or you can, if it's someplace that you only go occasionally, there will be a single purchase certificate. And there's a box right near the top that you check to say whether it's a blanket or a single purchase certificate. The other thing that you will run into in retail establishments is they may have their own form that is a part of their checkout process. And when that is the case, you just need to say, I'm a farmer. And I encourage you to have one of these little guys in your pocket with you, or back out in the glove compartment in your vehicle, so that you can say, I'm a farmer, here's the rules, and you can fill it out and sign off on it in that way. So that's kind of the long and short of sales tax. I'm trying to be mindful of our time and where we're at tonight with that, but I guess for that, I will open it up to questions about getting started with sales tax.
We have quite a few questions about specific products and whether or not they'd qualify for sales tax. So I included a link to the guide in sales tax in New York. And if you scroll to page 14, it lists out everything.
Yep.
So just, check that out, because it does go into depth about what counts and what doesn't count. And if you still have questions, go ahead and reach out to us.
Thank you, Caitlin. That's the best way to address that.
It gets pretty boring reading that list off. So that was what all of those questions were relating to. There was one question. If I had an EIN for a previous contracting business, do I need to make a new one for a new farm business?
That depends. If you were a sole proprietor, and you may have to discontinue the old number in order to get a new number. Probably should not continue with the same number, but I would definitely talk to the folks at the IRS about that. That would be one of those reasons to call and be on hold for a while till they get to you.
Thank you, Joan. And Ali just pasted a list that's from Cornell Small Farms Program of farm specific products too. So feel free to check that out. I think that we are safe to move on.
Okay, I think I'm next with farmers school tax credit. And this is for basically the school tax is one of the real property taxes that we pay in New York. And you are entitled to this refundable credit if you or your business is engaged in the business of farming and paid school district property taxes on qualified agricultural property. Now, what is qualified agricultural property? Qualified agricultural property is land. It is not buildings. I'm sorry, it's land and buildings, but it's not your house. So it's important that you allocate the taxes among those items. So when you may want, there's a couple of different ways that you can make that allocation. One of those is you can talk to your assessor and get a copy of their property data sheet and see how much they've got of your assessment on each portion and divide things out percentage wise that way. Or you can make your own allocation. But because there's a farmhouse on most properties, that does not qualify. Okay, and then the next thing is when claiming the credit, you have to have the following information. You have to keep the following records: copies of your school tax bills, copies of the canceled check that documents that you paid them, in an organizational chart that includes the entity names and the identification number and the percentage of ownership if there's multiple parties that own different pieces of land associated with your farm business. Again, you have to think about that non-qualifying property. And if the tax bills for that property are not to you, if you're on a land contract, so the tax bill is going to the current owner of that land, but you're in the process of buying it on a land contract, then you need a copy of the land contract that has to be supplied with that. This is a credit on your New York State income tax. It is a refundable credit. And to claim the credit, you need to file a CT 47 with your New York State income tax return for corporations, or the IT 217 if you are not a corporation. And technically an LLC is considered a corporation for these purposes. So that would be sort of the quick and dirty on the farmer's school tax credit. But it is a pretty good sized credit. The other thing that's important is that credit is also income to you. So because you've already taken the deduction, you have to show that credit is income back on your Schedule F. The next year, in the year that you received it. Now to Dayton for forms of business, unless anybody's got a quick question about farmer school tax credit. I need to stop sharing. Sorry, Dayton.
That's okay, Joe, no problem. All right, I know we're getting up tight on time here, so I will just get through, slam dunk this, and we'll get through it. All right. So what I want people to think about, a form of business is an entity that's separate from your person. Okay. Well, not necessarily, but it conducts itself publicly in trading, buying, and selling. So these are the typical ones: sole proprietorship, which has no separation from your person, partnership, corporation, limited liability company. And I'm just going to say right now that in my professional experience, the LLC is, in my opinion, the most preferred business entity for a lot of reasons, mainly because flexibility. You can really do a lot with an LLC operating agreement. You can transfer assets, you can transfer profit sharing, you can do gifting. It's fantastic. So being short on time, my plug is LLC is the way to go in most cases for small farm businesses. I'm just gonna, so a form of business is just like another person sitting in the room. And that's what I think people struggle with. When you have an LLC or a corporation, those business entities own the assets. The person does not own the assets. So the vehicles, the machinery and equipment, et cetera, the business entity owns those assets, and the person owns shares or percent ownership in the business that, again, is tradable or saleable, which makes business entity very flexible. So, I was just, well, not too long ago, I was talking to a farmer, and he said he was going to buy a new truck. And I said, who's going to buy it, you or the business? He said, me. I said, no, the business will buy it. The business will own the truck, not you. So there's a lot here. I'll just kind of go through it very fast, and you can look at, I think Caitlin's going to send these slides out, but what we kind of look for in a form of business is something that separates our personal liability and business liability. So a corporation and LLC tend to do that pretty well, separating our business and personal assets and liability. Let's see. Corporation and LLC both have to be recognized by the state. And I would recommend, I actually have an LLC, and I worked through an attorney to set it up just because I felt more comfortable working with an attorney. And yeah, that was the thing. And I know you can do it online through LegalZoom, but I just wanted to make sure that it was done correctly. You want a business that can continue, if indefinite or perpetual existence. Again, sole proprietorship cannot continue. Partnerships terminate if a member leaves or passes away. So corporation LLC allow perpetual existence. And yeah, just governance, member owned, member controlled. Let's see, LLC members can designate managers, et cetera. So again, I really think the LLC is the most flexible form of business. And just want to restate that with a form of business, the business owns the physical assets, not the person's own shares or something that represents ownership in that business. And earnings can be distributed based on ownership, et cetera. In my experience, LLCs are generally taxed like a partnership, where the business does not hold on to any profits, although, and it's my understanding that an LLC can be taxed like a sole proprietorship, partnership, or a corporation. So a lot of advantages there. And okay, so that's a slam dunk. We're late, not a very good job on forms of business. My recommendation is for small farm businesses, LLC offers the most flexibility. Work with an attorney to set that up. And yeah, so just a couple words. If you're working with a lender, what does a lender look for? This is from the movie that's kind of old now, probably 10 years old, Despicable Me, and I just fell over when I saw this. The main character goes to get some money so he can commit a grand theft, and says Bank of Evil, formerly Lehman Brothers. And if you know, in 2008, they disappeared. So that's quite funny, I thought. The lender, they want a history of profitability, a strong financial position. If you have none of those, if you're brand new, they really would like a really nice business plan and clean credit history. They'd like you to have some skin in the game, okay? Like you to put some equity in, and also demonstrated experience. And so if you got all these things, if you have all those, here's some lenders in our area: Farm Credit East, Norwich Bank and Trust, also known as MBT, and Community Bank. If you have none of those, Farm Service Agency is needs-based and maybe an option for people starting out, although Farm Credit East does have Farm Start program. All right, I think that's a slam dunk.
Thanks, Dayton. We had a couple
Yeah.
of,
Okay, sure.
if you switch from a sole proprietorship to an LLC, what would you file for your taxes? So I think they mean like tax return time. What do you still file Schedule F, or what do you do for that?
Well, the LLC in any, I know Bonnie's on too, but the LLC would file a Schedule F. The LLC would file a tax return because that's the business entity. Does that answer the question?
Yeah. I don't see a response yet. So if you wanted to follow up on that, please go ahead and type that in. And another question, if you want to take another minute to talk about determining if you should start out as a sole proprietorship or creating an LLC.
Yeah, that's a great question. I think we had that question last year. And the way I answered it last year is that if you have no income generation and you really haven't done anything yet, you may want to just get established for a couple of years before filing an LLC. That's one answer. However, I know, I I think in today's society, an LLC presents an air of professionalism, so people naturally think that that having an LLC is professional, so that might assist you from a sales standpoint. If you have assets that are fairly significant, you may want to transfer those into an LLC at the start. If you have no assets and you're just kind of getting started, I don't know that an LLC is necessary right away until you have some income generation. Anybody else want to comment?
I would just say
I think that's good, Dayton. The other thing, because the sole proprietor is so most simple to get into, and you don't have a lot of assets, but one recommendation I would suggest is that when you think about going forward in your structure, that your attorney, your accountant, and yourself, the farm operator, all get together, because we look at it from all different points and objectives to why we're doing it. S corporation is another thing that some of the larger firms are using more and more.
Yeah. Yeah, thanks, Barney.
okay. I'm going back through. I've gotten a lot of direct messages, so I've tried to respond to you directly with those. If I missed one, though, let me know. But I think it's probably a good time to wrap up. If you guys have any questions that you would still like to ask, we'll stay on for a little bit, but kind of what happens from here, we will, sorry, one second. I will put together the recording, the slides for tonight's workshop, and all of the resources and email that out to all of you. As a reminder, we do have one last tax related workshop next week on tax code benefits for farmers, if you'd like to sign up for that, if you haven't already. And if you would like recordings from the first 2 workshops on income tax planning and record keeping, please let me know and we can coordinate getting those out to you. And then one last shameless plug for our Annie's project, Know Your Numbers, Know Your Options. If you're a farm woman looking to learn more about financial statements and improving financial literacy, please consider signing up for that. And we will send out a post-course survey. I'm going to drop the link in the chat right now, and this will also be in your follow-up email. Please let us know your thoughts about this workshop, and if you have ideas for future workshops, we take them seriously and try to make them happen. So Joan, Dayton, or Steve, anything else to add from there?
Just thank you for hanging with us till 9-10 p.m.
Yeah.
Yes.
The only thing I would
that.
add in the discussion about business structure, and maybe it's just me, is that it's also a risk management tool when you're looking at especially an LLC. And I agree with Dayton and Joan and others have commented that the value of the assets or the amount of assets that you have, does that mean that if you don't have much, do you want to, should you form an LLC right away? Well, maybe not. But as the business grows and you generate or gain more assets, you want to protect those assets, especially personal assets. And that's why some type of a corporation, LLC, or Bonnie mentioned S Corp, but I would say LLC would be the first one. It's a risk management tool to protect the assets for a long period of time.
Steve, just one comment on a corporation. So I've worked with a farm that they had a corporation in the 70s, and it's been a corporation since then, and they were ahead of the game then. But what we figured out is if they want to transfer assets out of that corporation to another business entity, it's a taxable event, even though no money changes hands. So in order for them to move assets from a corporation to LLC, it's a taxable event. So what they actually did is they created an LLC with the corporation as a member. So anyway, crazy stuff, but corporation, I think, is more restrictive than an LLC, and I'll stop talking now because it's late.
Thank you, everyone.
Yep. Thank you. Good night, everybody.
Thank you.